Hi, this is Joseph. It's Wednesday. It's January 23rd, 2013, and today we're going to talk a little bit more about the HL30 strategy. Now, if you watched yesterday's trade copier performance video, I talked about an HL30 trade that I took on the pound dollar and how it was duplicated into the MT4 trade copier, and my subscribers were able to participate in that HL30, and we got another HL30 today. The HL30 developed on the pound dollar. Now what we're looking at right here is Wednesday's price action. This is today, the 23rd, as indicated by this period separator, and you'll notice over here the next window, the second window here from the right, is Tuesday's. This is Tuesday's price action, and this is Tuesday's HL30 strategy or technique that we used, and I made a video showing you exactly what we did with that HL30 in addition to some other trades that we took. The HL30 strategy, just below this video there is a checklist, a HL30 checklist, and I put that together for you so that way you could go through, when you see a potential HL30, you could go through the checklist and make sure that everything's lining up correctly. Now with the pound dollar, the euro dollar, I'm looking at a 20 pip target and a 20 pip stop. And if price reaches that first target, I then look for a 20 pip second target. So from the entry to that final target, it's the total distance of approximately 40 pips if it reaches that second target. That's the reason I put on at least 2 lots when I execute this HL30 trade, so that I can participate in the maximum move that actually unfolds. It doesn't always reach the second target, but it will almost always reach the first target if you use this strategy correctly. We take profits at the first profit target and close that first lot, and then set the open remaining lot to a break-even stop loss, which is exactly what I showed in yesterday's performance. There was protection there. We earned the profits to the first target, but if it doesn't reach the second target, that second lot is then protected, and it just closes either at 0 or maybe a pip or 2 positive, because you set it at a break-even stop loss, which is exactly what I did yesterday. So the HL30 is, again, basically identifying the previous day's high and low of support and resistance, and then waiting for price to reach within that 10 pip range. The indicators that I use on this particular strategy are just the CCI indicator, but I'm using the CCI indicator set at 14 for a 30-minute chart. So again, we enter the trade with 2 lots. We look for a 20 pip first target, and then if price reaches that first target, then we're looking for an additional 20 pips, and I'm just using a 20 pip stop loss. Now I'm looking for realistic profit targets, and I've used that phrase for many years now, and basically what that means to me is that based on the market conditions at any given time, I can only expect price to move a certain distance. It's not going to continue indefinitely. You know, in the beginning of my trading career, back in 2001, when I would first get into trades, I would sort of sit and not really know when to get out of the trade, when to take some profits. So I would be in a trade where I would make, I don't know, I would be at maybe 40, 50, 60 pips in a single morning. You know, I kept expecting that maybe price would move, and I would think in my head, I want 80 pips. You know, this is great. Maybe even 100 pips. I read on some forum that some guy made 100 pips, I would think to myself. And this was back in 2001. And then I would hold too long. And then within maybe 40 minutes, I would end up sometimes giving all that money back. And I didn't have a proper place to take profits. So I developed the concept of what I call realistic profit targets, meaning that based on the price action, based on the type of day, based on the news, for that particular day, it's only going to move so far. And if you look, you can clearly see that from Monday, when the market opened, we printed a high and a low, and from that point on, price has just basically been moving sideways. And there are real reasons why price continues to remain inside of this consolidation range. So you'll notice how the HL30 continues to sometimes repeat itself inside of this consolidation range. And I did mention in yesterday's video that there are times when I stay away from taking this trade, even if everything lines up perfectly. And one of those times is when I see this pattern develop over and over again. So if I see the HL30 develop more than 2 or 3 times inside of the same consolidation range, that's when I decide to stay away from it. I'll take it the first time, perhaps the second time, But then on the third or fourth time, I'm going to stay out of it if price remains inside of this consolidation range, the same consolidation range, because eventually price is going to break out of that range, and then one of those HL30s is going to fail. But if you use it correctly, the first one's going to work out fine, and it will reach the first target. Not sure if it's going to reach the second target. That's why we have that protective measure where we're using 2 lots on every trade and then closing the first one at the first target, and then of course setting the second one at a break-even stop. So the candle patterns are also listed in the checklist, but basically we're looking for evening stars, morning stars, or bullish or bearish engulfing candle patterns, depending on which direction you're going to trade it in. So I wait until I actually get a candle pattern, which is here. That's the first candle pattern. And at that point, once this candle closes, I'm sitting watching. This is an active trade. So I enter the trade on the close of that candle. That's my entry point. 1.5847. That's my entry. Now, the other thing that we do is we line up the CCI indicator. There cannot be any divergence on that close of that signal candle in the CCI indicator. And we're measuring it to the previous day's low. The previous day's low, you'll notice the CCI reading here on that previous day's low, and then you'll notice the CCI reading on the close of the signal candle. So it was a much higher reading. Now, of course, it would be opposite if you were trading off of resistance. Now, the entry again is 1.5847. That's on the close of that candle. I'm looking for a 20 pip stop. We're looking for a 20 pip first target, which occurred here. You'll notice how many candles it actually took. Each one of these candles is 30 minutes, so that gives you an idea of how long it can take. Now, it varies. It just depends on market activity. Every time it's going to be a little bit different as far as how long it takes for it to reach that first target. So it reached its first target here at 58.67. That's where I close my first lot, and then I set it at a break-even stop loss. And in this case, price did not reach the second target just yet. It pulled back and it stopped me out at that break-even stop loss. So I only earned the distance from the entry to that first target. On the first lot, that was it. The second lot just basically closed at 0. So that's how I protect my profits. Now, if this trade continued, which it does in many cases, it would not have pulled back to that break-even stop, and then I would have closed my second lot here at 58.87. That's really why we use that second lot, why we use 2 lots, because you never really know when it's going to break out or how far it's really going to go. But we know we're going to lock in 20 pips. This pattern repeats on all currencies. It doesn't happen at the exact same time, and it doesn't happen every single day. But it does happen enough that you could set up an entire page with maybe 6 to 8 different currencies and monitor that reaction. So basically when that rollover period happens at 5 p.m. Eastern time, that's when you begin to calculate the previous day's low and high for the day, and then you can mark off your 10 pip range. All of my trading material, all of that learning educational material is all included with your subscription when you use the Trade Copier service. So I hope that helped you out. It's a really profitable and simple trading strategy. And again, whenever I find trades like this and I personally take these trades, they're duplicated with the Trade Copier program, and all of those trade orders are instantly executed into my subscribers' MT4 accounts. So they never miss a trade, and they get to participate in these trades that I'm showing you today and in all the other performance videos that I've shown you. Thanks for watching. I hope you got a lot of value out of this video, and I'm going to be making some more videos on the HL30 for the other currencies, the pound yen, the euro yen. Those are a little bit different strategies, and then I'm also going to teach you a little bit more on how I trade the continuation breakout trades, and also some daily or swing trade techniques.